Good afternoon. It's our 3 p.m. again, and today we brought to you a really interesting topic. It's a thought. A lot of business owners, especially small business owners, they're working hard and then they say, how do I pay myself? They never know exactly how to pay and how much to pay. So today we are going to focus on ways to get paid out of your own business. Before we go there and look at our website, folks, right? This is where you're gonna find us. And you can come to Community CPA website, communitycpa.com, and you can click on the appointment button. The magic will happen. You will see folks who are partners at our firm and know what we are specialized, and you can book our time and we'll come to you. And other than that, all of those webinar topics we do, like today, we're talking about how to get paid and things like that. You can come here to search for anything you want. Like right now, I'm searching accounting. Then you will see all of these accounting topics start coming in. So you have us right here. And all of our topics we do is all loaded over here. So you can always find us. On the home page right here, you see all of the webinars we have. We have total, 1K videos, enough for you to spend your day over our video. I do have a client and they called us and they told me that he literally was on our YouTube channel for 24 hours, whole day. He went through a lot of our videos and decided to call us to become our client. So there you go. And it is not our purpose to make you, to force you to be our client. It is our purpose to provide knowledge to you so you can do better. If you do better on your own, you do better on your own. But if you do better with us, come on board. We will help you. All right, let's get through our webinar for today. There you go. Ways to get paid through your business. And some folks goes, it's my business. I can pay myself any way I want it. Yeah, you can say that. But folks, you are a business owner. I know what in reality you do. And you work day and night at the end of the year, and you don't take home much. And your spouse there goes, I don't know whether this is good or bad. You don't take any money home. We're still struggling, and you always just tell me your business is doing good. Where is the money? So, folks, when you do your business, just like how you pay your employees, how you pay people who are with you, right? Those folks who are with you day and night, and you know to take care of them. You know to pay them. You know who you do not take care of? Yourself and your spouse and your family. And you always think that yourself and the rest of your family can wait for later when you make more. No, in business, you want to reward yourself, reward your family, reward everyone who are with you every day, all the time. So let's just talk about what are the ways so you don't feel stuck. You're not like, I don't have money. What do I do? And let's talk about what you can do when you have a business. All right, a little bit about our firm, folks. We have more than 26 years practice history. Community CPA is not a new kid on the block. It is a well-grown, mature practice. And we have 10 plus languages and 10,000 clients worldwide. I claim that worldwide because we are a company really understand the foreign tax side of story. So if you are immigrant from Australia and from Asia, from anywhere in the world to US, and you don't know how to file your first year tax return, we're the one knows. All right. So we now have 4 branches currently, and we are looking on opening Houston, Texas branch in June of 2024. So watch us. It will come through. And the other thing I always brag about myself, I want you to know, because I served on the Federal Advisory Committee to IRS for 3 years. That is a selected process by federal government, and they select people to be on that board to serve. So it is a rigorous process. However, and it is also shows as a credential of an individual who were able to do that. And here you go. I wrote 2 books so far, 8 a.m. and 10 a.m. 8 a.m. is to start your business. 10 a.m. is to grow your business. So right now on my desk, I am writing the 2 p.m. 2 p.m. is about expanding your business beyond yourself. If you still have issue to pay yourself, you're not ready for the 2 p.m. And you really need to make sure that you grow and you pay yourself, pay it right, and then you go forward to 2 p.m. Then after you got to 2 p.m. and you will looking into 6 p.m. That's where I call it retiring from your business. I may just retitle that whole book as repurpose of our life, right? When we get to a certain age and we can't running like we used to, but we can think as we used to, or even better. So maybe we will repurpose our life to do things that more meaningful to the community around us. At that time, I know, there's not much of a reason to focus on yourself. Really, you want to make sure that people who are with you are having a great life. And that is always something I look forward to do. And for myself, I always think that whoever is in my social circle, I don't know a lot of people. I know a lot of people maybe comparing to regular folks who doesn't do business. It is a small circle. And in that circle of people, I want everyone, because of me, to have a better life. So hopefully that's where I will get to, and I'll bring you along with me because you are listening to my webinar. No responsibility disclaimer is more related to our technical knowledge. If that is outdated, for whatever reason we understood it wrong, and don't hold that against us, knowing that this is a free webinar. When you really want to implement certain things to your own business, be sure to engage us to help you, or work with your attorney and your CPA to have them understand where you're coming from. If they don't know where you're coming from, you can actually find the videos online. Just send to them. Goes, I heard from here, and can you help me? I am pretty sure they know what I am talking about, right? All right. So this is a whole list of ways you can pay yourself. 9 ways. W-2 salary, 1099 payment, K-1 distribution, 1099 dividend, loan from company, from your own company, reimbursement from company, and the company paid benefits, right? And the payback loans to company or capital draw. You paid to the company, you loaned to the company, take it back. That's how you get paid on cash as well, right? So you can have cash flows on your personal side. Capital draw, yeah, you can draw whatever you put in back. So that part is not taxable, right? Because that's what money you put in. Any money you put in the business is regarded your equity. Equity is the kind of currency that you have already paid taxes for. So when you reduce your equity, what does that mean? That means you don't pay taxes. All right? If you reduce your equity because you lose money, folks, that's why you got money back. When you file a loss on your 1040 against your W-2, you know that you got a bigger refund. Why? Because the equity you put in, which you already paid taxes, now it's coming back to you and you lost it. So you will reduce taxes that way, right? Vendor payment. Vendor payment are the checks you write to, your vendors, maybe Verizon, maybe AT&T. Those are vendors, right? But vendor payments are maybe the vendors you have in your business is related to company. It is you, so you are writing vendor payment because you provided service. Makes sense, right? Of course, all of these 9 items I mentioned there, it is related, so related to the type of entity you have. If you have a Schedule C, sole proprietor, or single member LLC, partnership, S-Corp, C-Corp, or even non-profit organization you are running. So all of these is like a structure, a house that you live in. So all of these reimbursement or W-2 or 1099 I was talking about earlier, and it would apply, part of that would apply to you. So I will break it down for you so you can see what I mean in this. All right. Sole proprietorship as Schedule C. We all know that if you have a small business, maybe you didn't even bother to make a structure out of it. You just kind of started. Hey, you know what? I started a community CPA that way. I didn't even know I was in business, and I was just helping people. And then I start getting cash and the money and put underneath my door saying that paying for service. I start to realize that, oh man, I have income here I need to report. So I started filing Schedule C. So proprietor. I helped people with their books and the tax, and they paid me, so I do it. But I didn't really have a community CPA and associate Inc. established. I was just myself. So that's a sole proprietor. You might just start it like that. And whatever you have left in your bank, in your business account. So when you're a sole proprietor, you do have an option to not set up a business bank account. I understand, you don't have to. And even if you set up business account, it's not really business, it's still under your personal name. Basically, you just have 2 separate personal accounts. One for personal, one for sole proprietorship, right? So that, we understand that. And if you have a separate checking account and track your small business doing, then that account, whatever balance you have in there, is what you can take. That is your money. And if it is under LLC, you know how sometimes single member LLC also files Schedule C under the 1040 Schedule C, right? And that can be done by written a business check. So if you have an LLC, even though you file Schedule C, you must have a business name LLC. So you can write that check to yourself and for your pay. And this pay, this profit you made, and the check you write to yourself is income to you personally. Is what kind of income? It is like a W-2 income. So when you put that there on your tax return, you know how you did a Schedule C, you got a net income, say 20,000. Then this 20,000 is in your bank as well. You can write the $20,000 out of that bank, go to another bank. So that's how you're going to get paid. Okay? What if you say, well, what if I don't take it out? Even if you don't take it out, you still pay taxes for it. So next year, you can use this money just as your own money because the IRS don't give you a choice to leave the money in the bank so don't pay taxes. No. IRS said that whatever income minus expense, you need to pay taxes. So you already paid taxes for it. Remember to find the balance between paying yourself and making sure that you have enough money reserved for your running of business, right? You want to count to see how many checks you already wrote, but that check maybe didn't clear your bank account. Just be sensitive of what you have in real expense. So that is how you pay yourself under sole proprietorship and LLC. Of course, the following ways, just to summarize this for you and how to get paid, other than what I was talking about, the profit under Schedule C, you can do yourself a W-2. Yes, you can. It's not necessary because your profit is your W-2, but you can. And you can also pay yourself a 1099 if you say that, oh, I'm just going to treat myself as a contractor. I'm going to pay myself $20,000, so my Schedule C is 0. no difference. Your 1099 NEC will end up paying the same amount of taxes. You just kind of move the money from one Schedule C form into the 1040 first page. So the tax side of world is the same, but for you, yes, you can do 1099 to pay yourself. You can also reimburse yourself. So what is reimbursement? Let's say you went to Walmart, you bought this whole carload of things, and the majority is for your family and kid, but there are just one or two items, it is actually for the company. So what you would do in that cashier's place, if I were you, I would pay the family stuff out of family account. I would pay the portion belongs to the business into business credit card or write a business check for it. Because that way, it is directly goes to the business. But what if you didn't do that? And you just got a one big long receipt, goes, oh, this is business. It's okay. You can keep that receipt and calculate the total and write yourself a check from your business to yourself and write down reimbursement of what? See, that's reimbursement. That means you spend your personal money already, but you need to get that money out of the company bank account. So make sure that's one way to do that. And company paid benefit, yes. Company can pay benefit, yes. And you can, maybe company is having a meeting in out of state, in this resort area, and you bought your contractor, you bought your employee, you bought yourself over, and yeah, the trip fees and everything can be deducted, and that can be a company benefit. And furthermore, you could establish retirement, pension plan, and life insurance, all of these as a company paid benefit, right? You could buy key man insurance, and because you are the key, if you die, your company die, right? And you can buy that insurance, company pays for the premium. And the only important part is that the beneficiary need to be your company, not you or your children. Like those personal life insurance that you are purchasing, that's a different story, right? With that said, and a vendor payment, you can pay your sister-in-law for the stuff she did, and then she invite you over to eat at her house, and I mean, didn't you benefit from that? Yeah, you did, right? So those are the things, ways to get paid. We're just trying to tell you that what can be a way that for you to benefit out of the hard work you did. 1065, that's a partnership return. And take money out of the partnership for partners, okay? So this is one of the example I have in my first book, Appointment with Ying at 8 a.m. In there is a Francis and Joe Francis. And Francis is the guy who works on the house. They're doing flipping jobs for the home. And Joe is the one that much older than Francis and put out $250,000 for Francis to purchase the house and renovate and sell. So this is a partnership. And 5 regular ways to take money out of this partnership, because this is the discussion Joe and Francis has in my Appointment with Ying at 8 a.m. book, okay? So Joe not participating in business, so he said that, oh, Francis, I can pay you W-2. And Joe also said that, oh, Francis, I can give you guaranteed payment. So you may be asking me that, what's the difference? What's the difference? There's not much difference. W-2, you will be, the company, the partnership will be doing Social Security, Medicare, withholding, and all of that payroll stuff, right? But if it is guaranteed payment, it's just a payment to Joe, to Francis. So Francis will take that guaranteed payment to pay Social Security, Medicare, and everything on his own tax return. You see how that works? One is come out of the partnership, so the partner distribution will be less, right? Because you made W-2 with the tax submission. But when you do guaranteed payment, the taxes is not there. So it is really become that individual, Francis, who got the guaranteed payment to pay that, right? Capital draw. Of course, Joe, can take money out, and he put in 250,000. So if he took that back out, and it is not going to be taxable because that is his capital, that is his investment. Almost like you bought a stock on Ameritrade, and then you bought for $1,000, you took $1,000 out. That is, you close the account. Oh, I put in 1,000. I don't want it anymore. I take it back. If you didn't make any gain and losses, you took the same amount out. That is what you put in, so there is no tax, right? Of course, reimbursement. And Joe is the one that always paying for drinks when him and Francis are at the bar. And Joe can request for reimbursement, right? Because he had a meeting with Francis. They decided how to get paid. And so that is business expense. Am I right? They had a meeting. So they can get reimbursement. So when owners or employee paid expenses on behalf of the company are reimbursed, right? Of course, with a receipt. And it is a tax reduction of the total. It's the income reduction of the total income, right? When you do reimbursement, you account that as a business expense, okay? Then at the end of the day, end of the year, maybe interim, you can calculate the K1 distribution, but you will get the distribution at the end, right? So these are ways, normally as a partnership, and you can think how you can negotiate and get paid. But then what about other ways? Is there any other ways? Yes, and you can loan from the company to get cash temporarily. Even though you loan from the company is kind of yours, you still need to have a proper rate and a proper agreement. So you will pay it back, right? Company can pay benefit. But in the partnership, and a lot of the benefit I am talking about here is related to payroll. The reason I say that is, for example, the key man insurance. If you're not even an employee, how are you going to be the key man insurance? You can't be insured. You don't have the tie to the company's success or failure, right? So if you want to do pension, it's only for employees. You don't have W-2, how are you going to do that? So company paid benefit if you have W-2s and you have payment going out to people. And the vendor payment, same thing. You could set yourself up with, like I know Francis doing the house flipping, but he, I have known him for so many years. So now he's actually starting a manufacturer for the drywall. I don't know which part of drywall is a drywall component that he's producing. So, with that, he could have paid from the partnership to the drywall company, right, to purchase material. So that's where the vendor payments come in. All right, so S corporation. We talked about sole proprietorship, single member LLC. Then we also talked about partnership, right? So now it's S corporation. Generally, two ways to pay to the shareholders. As one, you are the business owner, so you're one of the shareholders. So there's two ways to pay yourself. Number one, W-2. Number two, distribution. So here I want to mention to you that if you have an S corporation, you know that you work in there, you have to have a W-2. Because this is the famous term you heard of IRS talking about reasonable pay. Got it? What is reasonable pay? Reasonable pay to say is that if you are a shareholder, employee. If you are a shareholder and also employee for the company, you must pay yourself reasonably. Because if you don't pay yourself reasonably on W-2, obviously you pay yourself too much on distribution. Distribution do not pay Social Security, Medicare tax. Smart, right? And some people, there's a famous case to a CPA firm's owner and one of the partner, and they got distribution for $240,000 each. But they paid the partner for $20,000 W-2. Do you think that's reasonable? No, it's not. Because a partner at a CPA firm, you make a lot more than $20,000 a year. So make sure that you can pay yourself W-2. And why am I advocating for paying reasonable pay? I will tell you, if you pay enough W-2, you can have 401k, retirement plan saving, you can have pension plan saving, you can have your Social Security saving, that when you retire, your Social Security money is there too. There's so many reasons for business owners who pay themselves a regular W-2. Don't you want your spouse to be proud of you at home? You can bring a steady pay to the household so you don't wonder whether you get paid or not next day. Of course, it's easier for me to say, and you probably say that, oh, yeah, right, only if my business is really, really good. I mean, whether your business is really good or just good or really, really not good, a lot of it is how you understand your finance. I will tell you that I have people who are so eager to kick away, to sell, to get rid of their business because they think it's not worth it. Because they work hard and they don't get it, they feel like they didn't get paid enough. But when I look at their finance, I see exactly why they feel that way, because they did not pay themselves. But did they pay other people? Yes. Did they waste money and not to pay themselves? Yes. So there is a way to work your business, to do good for yourself and also do good for the business. Distribution. S-Corporation distribution are the only taxed at the shareholder level, which that means is, as a business, you have this 1120S tax to file. You never would pay taxes on that, right? So you got a K1, then you bring the income over to your own 1040 to get that paid. That's what I mean by shareholder level, not at a corporation level. And when income is earned by the S-Corporation, it is taxed only once, regardless of whether the income is distributed or is reinvested. What does that mean? That means that S-Corporation doesn't charge you taxes at the corporation level. It is all run into your 1040, and that's the ultimate place you pay taxes. So of course, and the C-Corporation's tax rate is only 21% flat, ladies and gentlemen. But our personal tax rate, the one we do on 1040, it is all the way up to the 40s, right? If you make a lot of money, more than $400,000 a year, AGI, you know how much you pay, and you with the state taxes, you pretty much pay 50%. Okay, so each share of stock gives a shareholder equal right to share that retained earning. So when you get a K1, it strictly go by the percentage. The reason I have this talk right here, because I also want to tell you that in the partnership side, it's not so. In the partner side, in my book, The 8 a.m. with Leo and Francis, that story, and when the partnership make money, there would be a ratio. But when partnership lose money, there will be another ratio. So it's not go by the membership, but here for S-Corporation is strictly go by your shareholders' shares. All right. And then S-Corporation also have other ways that you can get paid as a business owner. Okay. So the let me move. All right. So 1099 payments. Yeah, we talked about that, right? And you literally can pay yourself 1099 and EC if you want to. But the 1099 payment can also be paying for other things. It can be a royalty payment to you. It just depends on whether you have intellectual property in there. And you can also borrow money from the company to use for yourself, but just make sure that you check on the index rate, making sure your interest rate is reasonable and the contract is in place and you're paying back to the company properly, even though you can get a $20,000, $30,000 at once to use, right? Reimbursement is another big one. If you are a shareholder and you walk around, go around, flying around, you have those expenses that you paid out of your personal pocket, and gather all the receipt and write a company check to yourself to reimburse that expense. Of course, company paid benefit. That, I kind of touched on that with the other entities, right? And that can be pension plan, retirement plan, qualified, non-qualified pension plan. And you can also have your key man insurance, because you are paying yourself reasonably, so you have the W-2. And buying a key man insurance for the S Corporation is so needed. If you are gone and you want your company to fold just next day, no. You want that insurance company to pay that amount so you can at least run your payroll for 2 more years without your staff, your people, to scrambling and how they're going to live their life after you're gone, right? So those are the things that you can take advantage of. And of course, you can withdraw your capital and out of your S-Corp and take that money. And you can also set up a vendor and pay your related company for the services that they provided to your to this company. So there's ways to direct the money to benefit what you're doing. Am I right? All right, let's look at C Corporation. That is a corporation where a lot of talk about double taxation. So what is double taxation? Double taxation for C Corp means that you pay taxes once at the corporation level, then you pay taxes again at the personal level when you receive 1099 dividend to yourself. So basically, the C Corporation does W-2, of course, for you. You're a business owner, we still can do W-2 for you. And it can also pay dividend to you. That dividend is a specialty for C Corp. But just know that ordinary dividend, what is ordinary dividend? What is qualified dividend? Ordinary dividend, those are the most common type of dividend and are usually taxed as an ordinary income at the taxpayer's usual rate. So, what does that mean? Your income tax rate can go from 0% all the way to 37.5, right? So if it is an ordinary dividend, it can be taxed. It is taxed on the ordinary income level. But if it is qualified dividend, ladies and gentlemen, and normally when you issue a 1099 dividend, it is qualified dividend because you are a domestic small business and you're issuing qualified dividend. These dividends are reported in box 1B in your 1040. Okay? These are generally getting a lower tax rate. The maximum is 20%. So make sure when you run your C Corporation 1099 dividend, and you want to make sure that it is checked for qualified dividend as well, right? So of course, the same form can also report other income beyond the C Corporation dividend, like such as capital gain distribution from mutual funds, dividend from real estate investment trust funds, and the tax exempted dividends. So that is the form that we use for the 1099 dividend, not exactly just for the S Corporation. Just for the C Corporation, but it is an income that a shareholder should get. All right. Now, understand dividend. Many owners do not do this enough. Like they say, well, I'm not making any money, and I have a C Corporation. all the money is sitting there. I don't know how to take it out. I only pay myself a small salary. That is your problem. You want to issue dividend tax, okay? So how you do that is you calculate your profit and you pay taxes. Then after that, the amount is eligible for you to do dividend tax. Just make sure that is something you regularly would do, right? So, don't forget that is your one way of getting your income out of the company. All right, and the C Corp also have other ways to pay. So, for example, the 1099 payment we talked about, right? And the loan from company is also another one. And the reimbursement from company, you heard me talking about that. And the company paid benefit, huge. In C Corporation, I in some of my webinars and I talk about the difference between C Corp and S Corp. The best analogy I invented is to tell you that C Corp that C stands for capitalism. Capitalism corporation, which means that their purpose for existence is to benefit the shareholders. Anything they do is for the shareholders, ladies and gentlemen. That is why they call them C Corp. But S Corp is a socialism corporation. Why do I say that? Because the S Corp business owners do not have privilege to take benefit and deduct that as a business expense without sharing that with their people. But there's a lot of people want to be in S Corp. So there is other ways the C Corporation will pay, right? So we kind of run through that. 1099 payment, that can be what? It doesn't need to be NEC, just NEC. No, it can be 1099 dividend we talked about, but it can be 1099 others, miscellaneous. Could be royalty payment, and it could be maybe rent payment. Your corporation were renting your space, right? And the loan from company, of course, if you really got into a situation, you need to have a lump sum money and you can't get it from the bank, the company can pay you, can give you the lump sum money, but you need to just make sure your loan document is properly in place. And if you are not the only shareholder, then all the shareholders need to agree, right? And reimbursement, we talked about that. If you drive your cars for company purpose, the car is your personal car, of course you can reimburse yourself, right? And the company paid benefit, we also talked about. If you are a C corporation, you are a corporation protects the shareholders. So you can develop your benefit. They are all business expense, ladies and gentlemen. These company benefits are not something you don't get benefit right away. You reduce your taxable income right away. Of course, pay the loan. If you loan money to the company and the company can pay you back, you got your cash back, you got your capital back. And if you have, vendor payment, if you are a company, if you have other related company or not even related, but just your good friend you met at the bar, and you can set up a vendor payment and pay these people and then reduce your taxable income. So those are things you can do. And of course, I want to show you this 1099 dividend. This is the one that is not a K1, remember? This is the one you need to do when you distribute money out of the C Corp. And you notice that 1B column, did you? And it's right here, ladies and gentlemen, it's right here. Did you see that? So you want to repeat your number if you are a domestic small business and you know how to do 1099 dividend. If you don't, you have me and you can contact community CPA and associate and we'll be here, right? All right, this concludes our path to understanding of how to pay yourself when you have a business. And do not discount on that for yourself. You really do need to live a comfortable life, a rewarding life, and reward yourself and pay yourself. And don't just save the money and thinking that one day I will pay yourself. No, that one day is today. So make sure that you do. The last 2 slides, I just want to give you more information of ourselves. This is our partner. When you make appointment online, you will see. And most of our partner, other than Dr. Hao and myself, the other partners all have free sessions. You can book. It's 30 minutes. It's free. You book and you can talk to them and get a feel. And if you are onboarding yourself with us, and Dan Kim, the one you see on the 3rd line, and really is the person who are helping with onboarding and is very experienced and has been with the firm for a long time, and he is one of our partner. And the other ones, if you happen to speak Spanish and you want to speak Spanish, and then you can talk to Song, very experienced, has been really growing the firm with me. All of these people you see here, nobody is new. Nobody is even 10 years new. They are here helping firm for more than 10 years. And so they all come through from the junior, senior, all the way to manager and all the way to partner. So they earn their place and they do have the experience. All right, and on our YouTube channel, and remember to make sure that you subscribe to our YouTube channel and email Catherine@communitycpa.com. That's where you can get your voice heard. If you like to hear other things and wanting me to talk to a specific topic for you, and just go write to Catherine and we'll get you there. Remember, we are the only professional firm, CPA firm, open 6 days a week since the incision time. This is not just because tax season is here, we open 6 days a week. No, we have been open 6 days a week forever since the day the company was born. So it is our culture. So we're here on Saturday. When you happen to have time on Saturday, we're open. So give you more chance to get on board with us and knowing that you always have some help even on the weekend. So I will see you again and I'll talk to you soon. Bye-bye.